So Nadia, what's up?
We making money moves.
Who making money moves?
We making money moves.
You making money moves?
We making money moves.
We making money moves.
We making money. Hey everyone, welcome back to Millennial Money Moves with Nadia. Please don't forget to like, subscribe, and turn on that notification bell. I know you guys have heard me say it before, but when you guys like my videos, it really pushes out the content, and we want to share this to as many people as we can. And if you guys think of someone who you think might enjoy this content, please feel free to send it their way. Okay, now today we have a couple of things to talk about. I'm going to be teaching you guys what it means to buy on the dip. Now, this is a term I'm sure you're going to hear a lot from people who are into both day trading or investing. And, people often ask, oh, well, when's the best time to buy stocks? And I'm not going to lie to you. It's pretty difficult to perfectly time the market 100% of the time. That is a very unrealistic goal to have for anyone to have. So I want to give you guys a good strategy for good times to purchase. Today, like I said, we are going to be focusing on buying on the dip, and I'm also going to explain dollar cost averaging down. So let's say you've invested some money in Tesla and then it dropped. Now there's a pretty high chance that Tesla is going to go back up. So what I would do is not panic sell, but buy more shares while the stock is low. That might sound crazy at first because you're thinking like, oh, it dipped, I don't want to lose my money, so let me pull out now. No, this is why I keep stressing, do not panic sell. We're smart investors. We don't want to do that for a stock like Tesla. This is a good long-term investment. And if you see Tesla go from, let's say it was at 800 and it dropped to 700. Tesla shares are pretty expensive. And so if you want to build more of them, take that opportunity to buy while Tesla is at 700%. $700. That's buying on the dip. You're buying when the stock of the price is lower. So you're probably wondering, okay, like what exactly is buying on the dip? Just a clear-cut definition? When the stock price goes down, buy it. That's the simplest way I can explain it to you guys. And buying on the dip, I may have even said it in previous videos. I just really wanted to give a more thorough explanation of what that means. So some people buy on the dip and then they sell when it goes back up. This is a thing called swing trading. So for swing trading, you buy when the stock dips and then you sell it when it goes back up. And this can be a pretty quick process. This isn't always a long-term thing, but I would be very careful if you're doing that. That can get more into day trading, but that's not really what I'm teaching. I really want to teach you guys how to make long-term investments because, we want to build generational wealth. Now, if there's ever anything that I suggest that is a short term, like we don't want to hold it long term, I will always make that clarification so you guys don't have to worry about losing money, but it will most likely be long-term investments that I'm giving you guys because day trading and investing are two totally different things. So back to the Tesla example. It's a really good long-term investment because it's really increased, especially for those who invested early on. They made a great call, so hold on to that one if you're in it. And even back in last March when COVID first started, the market crashed and a lot of people, they started investing around that time and they bought on the dip, which was very smart because the market did go up and a lot of big stocks, their prices went down. So they probably made some good money about now. And, I keep stressing the importance of not panic selling. You don't want to buy when the stock is high because you see it going up and you think it looks promising. That's realistically not the best decision. You could save that money and just wait until it dips. Now, I'm going to tell you guys about dollar cost averaging down. That's when, let's say you bought a stock in a company and it costs $100 a share. And you want to keep buying shares in the stock. Well, one day, let's say this stock price drops down to $50. Like I said, with buying on the dip, that would be a great time to buy more. And now your average is $75, which is a lot less than if you had just bought 2 shares at 100. So again, to recap dollar cost averaging down, all it really is the average of how much you spent buying shares of a stock. Like I said, let's say you buy this stock at $100 and then you want to buy another share, but you buy it on the dip. So you buy it when it's 50. So 150 divided by 2 is 75. So although you have the same amount of shares, your average dollar spent is now lower. So that's really all I have for you guys today. It was just to teach you guys some basic terminology that I think is really important. I will still also be talking about my stock picks, so please stay tuned. Not my stock picks, but the one from my top 3 favorite YouTubers. Please stay tuned for those. I'm always here to help. I love when you guys ask questions in the comments. You know, sometimes it gives me new ideas of topics that we should tackle. So thank you for tuning in. Please don't forget to like, subscribe, and turn on that notification bell because those likes are really helping to keep me in the game. And we really want to help everyone with as much information and make as much money as we can. We making money moves. Have a good one. Thanks, everyone.